good afternoon, good evening, depending on whereabouts you are in the world. A very warm welcome and thank you very much for joining this exciting webinar, exploring how financial institutions can leverage data to grow sustainable and impactful education finance portfolios. By way of introduction, for those who don't know me, my name is Rachel Tabor, and I'm a manager within the Education Financial Products team at Opportunity EduFinance, working to oversee our operations in Africa specifically. We have a very packed, interesting agenda, but my role is to quickly go through the less exciting part, but important housekeeping. So firstly, just to let everyone know that interpretation is available for this webinar in French and Spanish. We'll put the instructions on the chat, but if you click on the 3 dots at the top of your screen, and then click on language and speech, interpretation language, then you can select in your preferred language. We'd also like to make this webinar as interactive as possible. Obviously, we've had to have participants with camera and microphones off, but I'd really urge you to use the chat box for any questions or comments during the session, and we'll leave plenty of time for a Q&A at the end to make sure our panelists can answer any questions you have. Finally, the session is being recorded, and the recording and slides will be shared afterwards. So without further ado, I'll hand over to our Senior Director of the Education Financial Products team, Jane Ike, for a more formal welcome. Over to you, Jane.
Thank you. Thank you very much, Rachel. Unfortunately, I think you'll not be able to see my face, but that is not a problem. I would like really to welcome everybody who has logged in. Good morning, good afternoon, good evening, from wherever you've logged in from. It's really a pleasure today to have you on this webinar. We do welcome you. What we've realized is that across the education finance landscape, we're increasingly seeing that data is not just a reporting tool. It's now becoming a strategic asset. When used effectively, it helps us better understand the risk, especially for financiers. We normally want to appreciate the risk that is embedded in our portfolios, but it also helps us to identify opportunities, strengthen portfolios, and ultimately improve the education outcomes. Now, today's conversation is about moving beyond collecting that data to actively using it to drive smarter decisions and have more sustainable impact. Now, this morning, afternoon, or evening, wherever you are, we are fortunate to have 2 experienced moderators. They will guide us in today's discussion and lead a panel of distinguished experts. Together, they will help us unpack key insights, draw practical lessons, and connect really real-world experiences on how data can be leveraged to build stronger and more sustainable education finance portfolios. Our moderators, Dr. Genzo Yamamoto and Lucy Kabalisa, bring deep expertise in this space. They will facilitate what we promise to be a rich and engaging conversation with our panelists. Dr. Yamamoto is the Director of Knowledge Management at Opportunity International, where he plays a key role in the organization's research, evaluation, and knowledge generation across all our programs. Lucy Kabalisa, on the other hand, is a Technical Assistance Advisor for Opportunity International, supporting our financial institution partners in various markets in which we deliver technical assistance. We encourage all the participants to actively engage. Please share your questions and reflections in the chat throughout the session. I know that we have a time that we'll just deal with the question and answers, but please keep on dropping them in. Our panelists will continue to respond to those questions. And with that, it's now my pleasure to hand over to the moderators. Over to you, Doctor.
Hello, everyone. My name is Genzo Yamamoto, and I'd like to welcome everyone once again. Thank you for joining us. I'd like to take this opportunity to frame the upcoming discussion. I will keep it short and sweet so that we can get to our important distinguished panelists. As we begin, I'd like to put on the table a simple and important core idea that sustainable education finance portfolios should be built on data, not intuition. So the topic that we would like to explore today with our panelists is How can we use data to build portfolios that can grow sustainably while genuinely serving schools and families? Financial institutions face recurring decisions across the full education finance lifecycle. You can see these 5 areas on the screen here. Market entry and growth talks about where and when to enter a market. Product design is how to design products that match real school and parent cash flows. Risk management is perhaps obvious, how to spot and manage risk early. Client satisfaction, are these products actually working for our clients? And then, of course, how to report performance credibly to investors. And I think the key point here is that data should inform all of the decisions that are suggested across these life cycle events. It's not just at one point at the beginning or just at the end. If you want a portfolio that grows and survives shocks, you need a data habit at every step. Okay, so there are 2 data processes that are especially important here. First, there's market research. This provides for us a forward-looking lens. It helps financial institutions size the opportunity, understand what schools and parents actually need and can afford, and it builds a credible business case for launching or growing an education portfolio. This is something that needs to be periodically reviewed. Second, there's business intelligence. This is the inward-looking lens. It uses your own portfolio data to track performance by product, by segment, and by geography. It spots where risk is accumulating, and it supports better day-to-day decisions on underwriting, collections, and resource allocation. These 2 pillars work together. Market research tells you where to play and what clients need. Business intelligence tells you how you're performing and what to fix. The goal is not just more loans. It's healthier schools and families, which will in turn support a portfolio that is financially sound and demonstrably impactful. And this is one of the key areas where Opportunity's EduFinance program seeks to support financial institutions. One of the things that we've discovered is that many organizations can miss or underestimate the importance of certain steps in this in the setup process of the data infrastructure. These can include things such as the ones listed here: data capture structures, dedicated product codes, clear product definitions, consistent tagging. These and others may come up in the discussions to come. Okay, so what I have tried to do is to conceptually frame how data can inform decisions across the full portfolio lifecycle. Now, in the remainder of this time together, we want to bring this to life. You'll hear how Opportunity develops such frameworks for our financial institution partners, and then 2 of our partner financial institutions will share how they've built their data infrastructure and are using it to guide decisions every day. The conversations we've had leading up to this webinar have been promising. I think you will find this discussion stimulating. Thank you for joining us. And with that, let me hand this over to Lucy to move us forward. Over to you, Lucy.
Thank you very much, Doctor. Good morning, good afternoon to our participants. And you're most welcome once again to this insightful and exciting webinar, where we have experts that are going to really share with us how we can benefit from research, how we can benefit from business intelligence. I know as financial institutions, we invest a lot in different systems, core banking systems, but the question is the data that we collect right away from know your customer. How do we use it to build sustainable portfolios? That is the discussion in the room. And I'm excited to introduce our panelists today. We have Bree, and I will beg to use just the first name, who is our Data and Business Intelligence Manager at Opportunity EduFinance. We also have in the room Mr. Skanda from all the way from Pakistan, who is a head of operations and business development for Cash Foundation. Very happy to have you, sir. And we also have Robert, who is the CEO and co-founder for Jackfruit Finance, all the way from Kenya, East Africa. So you're most welcome. And we will have presentations from each of them to set us going. And after they've given us a bit of an insight and introduction of what we'll be discussing, we will then transition to a guided discussion where we take lead, and I encourage us participants to listen attentively. Please drop your questions in the chat room. We'll be able to pick them and direct them to the different experts in the room. And we'll also have a Q&A designated session after we've had the discussion and presentation. Thank you. And Bree, we'll start with Bree with the presentation, and Bree will hand over to Sikanda, and later we'll have Robert. Over to you, Bree.
Thank you. Thank you very much, Lucy and Genzo. Hello, everyone. Good morning, good afternoon. As we've heard, building a sustainable education finance portfolio really starts with data. At Opportunity EduFinance, we combine market research and business intelligence to support the financial institutions in understanding what demand is, how to design relevant products, and ultimately driving both financial and social impact. I'll briefly walk you through how this works in practice, some common challenges that we've learned, and what we've learned along the way. I would like to start with market research. And this is really about understanding the size and the opportunity of how schools and families actually operate. Through market research, we answer key questions like, where is the demand coming from? How do school businesses function? What are the financial needs of schools and parents? And these insights are critical because they ensure that financial products are designed around real client needs and not just assumptions like Genzo mentioned as well. For example, understanding school cash flow patterns or seasonal fee payments can directly inform how repayment schedules are structured. And we also draw on data across multiple countries and portfolios, which allows us to identify broader trends in client behavior and portfolio performances. Importantly, this is not just a one-off exercise. So client needs, economic conditions, and education systems evolve. So refreshing the market research allows our financial institutions to stay relevant and responsive. So once we understand the market, the next step is turning those insights into action. This is where business intelligence comes in and where we work very closely with financial institutions in practice. Beyond understanding the market, the next step is supporting financial institutions in how they can analyze and manage their portfolio effectively using data. So we provide a range of business intelligence tools and analysis depending on where an institution is in its journey. For example, we offer standardized portfolio analysis through tools like EdPack, which gives financial institutions a clear and consistent view of their education finance portfolio, looking at performance across multiple dimensions. This helps establish a strong baseline, but as an institution matures, we also support more advanced analysis where we can go deeper into areas such as risk patterns, branches, client segments, repayment behavior, and product performances, which helps strategically to optimize the portfolio growth. In many cases, this also involves strengthening underlying data structure. So for example, ensuring the clear product definition and segmentations. And another key aspect of the work that we do is that this is not just about financial performance. Through all of these analysis, we support financial institutions in understanding the social outcomes. For example, how financing is impacting schools, students, communities. So really, our role is to help translate those data into practical insight and supporting financial institutions at different stages. So of course, in practice, working with data is not always straightforward, and many financial institutions do face similar challenges, like data is often fragmented across systems. There's the gap between reporting and actual decision making, and it can be difficult to translate data into clear and actionable insights. Data quality and standardization are also ongoing issues. And what we've seen is that addressing these challenges requires a more structured approach, like clear definitions, connected systems, and also one focus on simple decision oriented analytics. These are the kind of practices that we have embedded in EduFinance and how we approach both market research and business intelligence. To bring this to life, I will share a few snapshots of what this approach has enabled us globally. We have over 22,000 schools that lended currently, and also more than 77,000 schools that have access to loans since the start of the program. Over 200 financial institution partners that we are working and expanding across 32 countries. Over 6,000 school fee loans dispersed to parents, which will help them get more opportunities to send their kids into schools. And this also goes beyond just financial financing. So we have, through our quality program, helped schools in over 14 countries with more than 5,000 schools training that actually work in this in EduQuality program, from training to school leaders and teachers. And so this is not just about using data just to grow portfolio, but to strengthen the broader education ecosystem. Finally, many of these insights are also shared through our research and publication. We regularly produce market studies and portfolio insights based on our global work. So I believe you should see some of these links into the chat channel. So I would encourage all of you to explore them if you'd like to go any deeper into those topics. And ultimately, our aim is just to ensure that data, like mentioned, was not just collected, but is used effectively to build sustainable, client-centered education finance portfolio. So with that context, I'm delighted to hand it over to the other panelists from financial institutions who will share their real world experience in how they're using data to drive portfolio performances and impact in their respective countries. So thank you again, and over to you, Sikander.
Hi, good day, everyone. Good morning, good evening, and afternoon, I guess. I'm here representing Cash Foundation. We've been basically in the microfinance arena since the past 30 years. We completed our 30 years just actually last year. And our main focus has always been women entrepreneurs within Pakistan, how to improve their situation, how to improve their overall impact within their households. And just to basically reinforce that, this is a snapshot of where Cash Foundation is right now. So we just touched over 1 million customers in November 2025. And we had quite a fruitful year this like in 2025, in the sense that we won the first or the best microfinance award from State Bank of Pakistan. And we also received another 7 awards, the most awards actually from Pakistan Microfinance Network, for different contributions in different areas like female entrepreneurs, outreach, and different areas basically. Amongst these 1.1 million clients, we have about 3,500 loans which have been basically dispersed to schools. It looks like a very small number, but the thing is we are catering to a specific niche in the market. So we focus on impact and outreach only in that specific area rather than going out for every school, because our main focus has always been mission orientation. Where do we want to go? Which market do we want to cover, basically? Otherwise, the GLP is mentioned with respect to USD, it's 167 million. Our portfolio at risk overall is around 0.45%. Almost 94% of our customers are actually paying all their installments by the due date. Our sustainability, organization sustainability, is around 137%. We also monitor our social KPIs, where our retention always remains above 70%. That means 70% of our customers always come back to us. The turnaround time, which basically we gauge that after basically completing a loan, we disperse 80% of our loans to our customers within the 7-day mark, basically. We have 85% of the female entrepreneurs who actually are leading the business rather than it's not a partnership. Aside from that, we have almost close to 500 branches now. We'll be crossing the 500 mark hopefully by September this year. In any case, we've spread it over 13 regions across Pakistan. And if you see the small map on top, basically we're covering most of Pakistan, areas where microfinance is possible. So that's where we are. As I said, we started in 1996 primarily, and we were a paper-based organization. In about 2004, we actually launched our first in-house LMS, or loan management system, basically. That's called Miracle Worker. Since then, we've had various different versions of it. And in about 2009, actually, we changed our lending methodology from group lending to individual lending. Prior to this, we were following the same model as Grameen, because our founder, Roshane, she started off the company with the same group lending model. But what we saw that in Pakistan, it was more feasible to go after individual lending if you actually wanted to mark the way the loans were utilized and how you were actually changing lives. In group lending, we thought it wasn't really making sense. So that's our terminology or our methodology. And I think it's working for us. All the 1.1 million customers you have over there are actually all individual lending customers, which is a much more expensive model. But I think it's more effective for us in Pakistan. In about 2013, what we started to see was that, if you want to improve your numbers, if you want to improve the productivity, the process of actually transferring your applications from your computer, from handwritten applications to computers and then dispersing loans, it was too much. So what we did was we were the first company in Pakistan who started off actually onboarding customers through tablets or through phones, basically. And that actually increased our productivity by almost 50 to 70%. So if a BDO was initially, or a sales officer was initially dispersing 18 to 20 customers a month, we went up to 35 customers a month, basically. So that obviously shows that as you progress in your how you improve your technology, it actually increases your productivity as well. And the outreach that you can achieve is much more faster. We also launched our education finance product around that time as well. We were the first one to actually start health insurance for microfinance customers in Pakistan. I mean, we basically launched the product and then others followed basically. We launched the first Sharia compliant product around that time as well. And we also started basically playing around with a machine learning credit scoring model in which we were actually starting to gauge our customers according to the pattern with the data that they have and the way they were basically their overall behavior. Around about in 2023, around this period, we basically started off, actually, we automated the overall KYC process in which the credit file was automatically validated. We started biometric verifications. The other things that we started to do was all the delivery channels that we had to get the recoveries, we started implementing APIs with them and API integration with them. So most of the recovery that we're getting from all our customers is through alternate delivery channels now. And it's all through API integration. Every time a recovery is like input, it just comes straight to us and it goes to the carrier as well. Previously, it used to come, then it used to be posted. It used to take almost 12 hours to actually post all those recoveries. Now everything is automated. In the same way, we have multiple banks through which we are integrated through APIs as well. So all the disbursements that we do to our customers, we simply disperse the loan from our branch, and they can simply go to the bank and get the money from there. So overall, I mean, as you progress along your technology journey, these things come into play. You need to be very good with respect to the initial setup of or the architecture of the data that you want, the data points you want. Then you need to see how you want to progress in the next 3 years. So we have a 3-year strategy in which we see how we want to progress and how we can actually improve our efficiency. Keeping the basic thing in mind is basically the client. How can you actually accommodate the client more? How can you make their life easier? Because it's a very simple sort of market that you're playing with. They have very small demands. The only thing they want is simplicity and they want convenience. So we are trying to work in all those things. Then to improve our own decision making, then we started off playing around with our business intelligence models, and then we introduced those. What are the advantages of having data? So yeah, the next slide. So how does data help us basically? You have different stakeholders in which you're dealing with on day-to-day basis. You have external stakeholders and you have internal stakeholders. The external stakeholders include your basically regulatory authorities. Then you have your lenders, you have your bank, you have your donors. You need to report all the time to those people. Then you have your internal customers in which you have your management, you have your monitoring teams who are actually your watchdogs on how effectively you're managing your portfolios. Then you need to use that to basically effectively monitor how you're doing with respect to your portfolio, how you are progressing with respect to the targets you've already set for yourself. And overall, by doing all these things, the main goal is how to improve your productivity and how to reduce your risk. So data is basically, it comes in play, and the way you manage it, that's the best way of doing it basically. So this is just like an idea about how an effective tech solution would help you out basically. What are product for, because we are mainly talking about education finance over here. So I just want to give you a brief idea about what type of loan we're actually after. So we are dispersing loans to low-cost private schools, which basically means the school should have at least 40% female students. They should have at least 40 students in the school. So, and we've recently incorporated or included academies as well. So rather than going a level up, we're actually going a level down because we want people to graduate into LCPS schools and then go into bigger schools as well. We have a very small spectrum of schools in which the maximum fee for any class or average fee for the school should not be more than $18 a month, basically. They should have sufficient financial capacity to repay the loans. And we also focus that 50% of the owners of these schools should be females, 50% could be males. This is probably the only product in which we allow a male customer to lead the loan. Otherwise, all our loans are dispersed to female customers, basically. We try not to indulge in those schools which are already being managed or influenced by government or by NGOs or profit-oriented school systems. So we are focusing on very specific market. What we're trying to, the additional things that we give a capacity building training after the loan has been dispersed to their staff members and to the school, so they can actually improve their capacity. They can improve the way they deal with the parents. They can improve the way they overall run the school with lesson planning and all those things, basically. We also additionally offer them health insurance for the whole family, for the owner, life insurance, and all the loans are basically processed at the doorstep, and they only have to come to the office once to actually get the loan dispersed, and then go to the bank to get the amount from the bank, basically. So this is the simple product that we have, and it's been curbed many times. We started off with the very manual forms. We had a 4 or 5 page manual form which had to be filled and used to take 3 hours. Now it's just a tablet in which the form can be filled within at most 20 minutes, basically. So that's how we evolved our IT side of things. And we what I wanted to show was these are the 4 basic things that we get in an application. So we take down the personal information, we take down the institutional information, the utilization, where the loan is actually going to go, and the type of documents that we take. So these are all the things that we capture in an application. So at any point in time, if you want to assess or research on what type of schools are doing better, if a school is going to be better at a certain income range, if a school is going to be better with respect to certain staff profile, what kind of grades should we be focusing on? So we do a financial appraisal as well. We take down official IDs, education of the school owners. We can even drop down and see if, for example, the education of the owner or the principal of the school makes a difference in the overall progression of that school as well. So if you have multiple data points, we have much more than this, actually. I've just jotted down a few of the main ones, so that basically you can have an idea on how you can set up your own application when you set up the school loan. Aside from this, this is like an interface. It's a very small version because I had to, put it in. We capture all this information through our loan management system. This is like one of the screenshots, the way. So for each and every class, we even monitor how many female, male students do they have, how many, what is the fees of each class. Then we take down an average fee of the class so that we have as much data as possible and we can service these customers better later on. So this is like a screenshot of that, our actual loan application. Now I'll go into how we are actually using our BI dashboards to actually improve our visibility, improve the way we monitor our portfolios. And I'll give you 2 or 3 quick examples of how we've set up our dashboards, basically. So yeah, the first one is basically the Power main dashboard. So if you get a snapshot every day in the morning, you open up your computer and basically you can see how many active customers you have. That's given in purple on the top, basically what is your OLP or your GLP, your 1-day power for that day, your 30-day power. This is for the whole complete portfolio. But you have different filters on the left where you have basically in the orange boxes, you can easily see if you want to monitor your 1-day power, your 5 to 15-day power, you want to look at power, which is about 365 days, you can do all that. You can do it by product, you can do it by your organizational structure, like let's say by your region, by your area, by your branch, even up to portfolio level. And our power dashboard actually goes all the way up to a client level as well. So this is a very detailed dashboard in which we can monitor our overall organizational performance just by having proper data and setting up the structure properly. The next is a power detail dashboard. So if I want to actually, let's say, monitor my power with respect to BDO, with respect to client ID, the one given on the left side in the orange box, I can check the power by a business loan user, by the sector. Let's say I want to check basically which sector is doing better or worse. If I want to check if, for example, people who are renting places or actually have their own their places, is the power high or low? With respect to the credit score, with respect to their net disposable income, you can pretty much drill down everything in your BI platform. So it's just an example of how you can actually set it up and do this in the best way possible. This is again another dashboard in which we are monitoring recovery. I told you initially in the beginning that we have almost 94% of our customers are actually paying on time. This is how I know it. In December, you have this. In January, you have again the same number. And in February, you have similar numbers. So we can keep progressing, checking it. And we have different regions over here. So if we see that, okay, the average is 94%, but this region is around 89%, we really need to go and see why that is. Is there an issue in the portfolio, in the branch, in the area, or whatever, basically. So it's a healthy way of monitoring how you can actually use your data through your dashboards, basically. This is a bit about what we've done. I'll just touch on a bit about what we are doing. Basically, in the last 6 months or so, actually, the climate resilience project that has been running with us since the past 1.5 years now. We initially did a study with another company, and now we basically implementing what was basically analyzed and what we researched on. Basically, we did it with Frankfurt School of Management and BII, and what we realized was that we need to actually, if we want to be more climate resilient, we need to actually start mapping our customers with respect to the amount of risk they're in, basically. So for all our customers, we've actually hired a weather company in which we are actually mapping our customers whether they are in low risk, high risk, or medium risk with respect to heat, with respect to floods, with respect to drought, and all these indicators, basically. And it's a very long, tedious process, and it's a very long way of, it's quite a long road of doing all these things. What we realized that for things like flood and all, we need to actually come up with 2 climate resilient products for agri and for home construction as well. And we're working on those right now. Aside from that, Kash is looking at basically going into an ultra poor program in which we will basically be setting up a client end to end, starting from basically training them, then basically giving them investments, then trying to graduate them into microfinance customers. Another interesting 2 things that we're doing in the next 2 years is basically integration of AI. So how do we actually improve our quality of input that we're getting from our field? How do we analyze it? And before actually saving that, how can AI help us to actually validate that all the information that's been entered in the system has been of quality? The next thing that we're trying to do is we want to make it into an AI into a risk monitoring framework in which every time something is going below a certain trend or above a certain trend, we should have alerts so that AI can monitor whether we have any early warning signs in our portfolio. And the other thing that we want to use AI for is basically analytics for at management level and how we can actually improve things even above a BI dashboard model, basically. Plus, we're going into a Cash app, and we want to make the app very different in the sense that all the app, all the input, everything that the customers do in the app will be voice operated, rather than actually doing anything on that keyboard. So literacy is an issue. To counter the literacy, we're trying that all the application-related things that we want to do are voice-operated. So these are a few of the things that we are looking at and we plan on doing in the next few years. So I'll just pass it over to Rob now, and he can take over. Thank you.
Thanks, Lucy. Thanks, Sikandar. Hi, everyone. Great to be here. And to share a little bit more about Jackfruit Finance and sort of Jackfruit Network and the 5-year journey we've been on. So we're very different to Sikandar's organization and Cash Foundation because we only work with schools. So basically, just to give you 10 seconds on the history of the organization, we started exclusively as Jackfruit Finance. So Jackfruit Finance basically uses technology to digitize schools and lend to schools. So we just lend to schools. And the first 4 years of our journey was ultimately kind of challenging, but also very successful in terms of the growth and like how the whole organization was flowing. So Jackfruit Finance basically uses technology, which I'll show you in the next slide, to enable one of our field team to walk into a school that wouldn't be able to provide audited financials and wouldn't be able to provide this sort of digital footprint that a traditional lender might require, and gather the data required to do that. So then we lend to schools. Some of the most amazing things that we've seen so far that's very similar to Cash Foundation is we've had a 99.3% collection rate since day one of lending. So that's every single dollar or shilling, Kenyan shilling dispersed. Jackfruit Finance basically operates now in Kenya, Uganda, and Tanzania, with us expanding in Uganda and Tanzania this year. But we basically lend to schools to do calendar match loans. Now, the organization has grown and we've been working a lot with philanthropy as well into our schools. So we set up a standalone entity called the Jackfruit Foundation. And like ultimately how that ties back to the subject of this webinar is the data is what our foundation brings and why philanthropy looks to work through us. So we leverage the data from the Jackfruit Finance side to make philanthropy more targeted, which has been fantastic. We've seen enormous amounts of capital and programming run through us into the schools that we work in. And then the last piece is the hub. So the hub is basically an e-commerce platform that sits in the middle. The other piece that we see as a huge opportunity organizationally is that there are so many people who want to work into schools. So like the link point and the access and the network is something that we look to monetize on the hub side and provide for free, just to kind of accelerate impact and philanthropy on the foundation side. So on the next slide, I'm just going to like dig in a little bit closer. So ultimately, kind of what does this look like? So for us, because we started as an education finance lender in isolation, we always intended to design the whole organization around how to lend to schools and how to do it as effective as possible. So we've obviously come at education finance from a different angle to, I'm sure, many of the people on this webinar, where it's enabled us to like tie all of our systems and structures and reporting functions around how we lend to schools. But ultimately, like the customer journey, because that is where our technology starts, is as follows. So in this case, a school owner called Beryl in Kenya basically reached out to us through the WhatsApp chatbot. We've seen enormous success in schools recommending schools. It's basically how we have grown to 840 schools to date in Kenya and 40 in Uganda and 20 now in Tanzania. And basically, Beryl will have gone through a WhatsApp chatbot journey, which is machine learning backed. So then there's like a pre-vetting function that then links across to our field team. So we're a 90-person organization. So again, very small, I'm sure, in comparison to many of the people on this webinar, but ultimately that feeds through into one of our team on the ground. So the other piece that data has enabled us to do is to run a decentralized field team. So we just have a head office in Nairobi, and we're now running an organization that lends to schools all over Kenya, all over Uganda, and all over Tanzania. And the way we're able to do that is that the data is like a pre-vetting function that links then to one of our team on the ground. Our application both digitizes schools, but also is like a field team control function, which has enabled us to do this. And then the data centralizes back to our head office, which is where all of our most expensive resources are, credit, legal, finance, etc. We make a decision at head office and we can distribute a loan in 2 days, which is kind of our big selling point to schools. This is through the machine learning systems that sit behind all of this data gathering. And similar to Saganda, like AI is becoming more and more integral to how the machine learning learns. We've had an interesting journey with AI, which I won't go into too much here, but like it's been very useful for training our machine learning. Obviously, AI is a form of machine learning in some respects, but it has been actually very ineffective for us so far when it comes to just like straight underwriting, because we haven't had enough data to train it. That then feeds through, once we lend to a school, in this case, $6,500 for a secured vehicle loan, and that enables them to access other preferred loans, free edtechs, because on the foundation side, we have a full edtech solution that was absorbed into the organization many years ago, and then a hub procurement piece. Next slide, please. Cool. Just to quickly share very high level on the journey. So we started in 2021. We're about to hit 5 years, so not quite the 30 years, but hopefully we can replicate that of Cash Foundation in time. And by going school to school, we've been able to accelerate very quickly. So we're now in just under 1,000 schools. So we're well on our way to that target of 1,500 schools by the end of 2026. And we're just under $10 million of loans dispersed to date. And as I say, we've had a 99.2% repayment rate on that. So it's been incredibly effective using the technology that we've done. And the biggest piece in terms of like where this is going is we've just recently launched through the WhatsApp, because we start by gathering data through WhatsApp. It's also enabling us to push the envelope in terms of what we can then do to feed it back to schools. So we've recently launched out Yale University put together a team to work on this for us, which was amazing, where we're able to feed back to the schools their data. So this feels like kind of the completion of the data flowing into the organization, where we basically share it back with the schools and we can show them how they're improving over time. Most of the schools that we lend to every single school term. So we're able to update that data, and we're also able to show them how they're trending. The Opportunity team provide us with trendline data on a monthly basis, which has been fantastic. And the intention was to always then provide that at the school level as well. So through the Jackfruit system, then the school receives basically a poster. It's like a PDF poster off the back of our data that they can put up in their school, and they can show parents that they're improving over time, which to us felt pretty fundamental, that we're gathering data from schools and we needed to feed that back to the schools as well. So that's kind of like one of the cool things that we're just launching now. And then the other piece, and this is something just generally as a note to organizations on here, we've expanded to Uganda and Tanzania through a partnership with Finca International. So we've basically attached to the bank using our technology, product, and brand to become the education finance arm of Finca in Uganda and Tanzania. So this is like a really exciting evolution for us as like a very young, very small organization in terms of like how we can help bring the data to larger financial institutions who don't have it or don't want to build it or need kind of like sector-specific expertise. And this is just something we're always keen to have conversations around. So yeah, happy to pause there.
Thank you very much, Robert. Thank you, Sikanda. Thank you, Bree. We could not have had any better panelists for this day, for this particular topic. Quite a lot to learn already that we've picked even from the presentations. It clearly shows and affirms that it's possible. Education portfolio from the practitioners shows already that 94%, 98% are all possible, and it works out. The beauty with the education portfolio, growing it and investing it, you're basically touching lives. So it's just not touching your bottom line, but we are changing lives. We are making a story, and we'll be part of the stories of the different learners who have accessed education because we've supported their parents through school fee loans. The schools that we are supporting are providing conducive learning environments. It's a very great story for any financial institution to be part of. What we pick from the presentations from the different presenters, it's just not lending, just having products, but how are we innovating? It's a process. So data helps us pick lessons, continuous improvement, continuous innovation, and that's how we continue reaching and growing our portfolios. With that brief, I will encourage the participants, please put your questions in the chat room. We'll give them priority. We'll keep checking, and we'll have an engaging discussion as we have some questions from our end that we are going to continue with, but we encourage you to drop in even from what has been presented. If you have any follow-up questions, please, we'll give them priority. So I will start off with Bree, from where you stand and having access to analyzing all the reports that our financial institutions submit. What have you learned that would improve the accuracy? What can financial institutions do to ensure that we get quality data? As we all know, I would want to reverse the statement, quality in, quality out of the normal statement. They usually tell us garbage in, garbage out, but I want to believe we have proven that quality in, quality out. What would you share with the financial institutions that are at different stages with data collection?
Yes, thank you, Lucy. So I think it kind of reinforces what was already mentioned. So having a similar definition across organizations of what is being trying to capture and what the KPIs is, I think is the first starting point. And having standardized processes that also helps in terms of making sure that the data quality improves. But the other main feature is also how is the data that you're trying to capture strengthening your strategic position? Is it answering your main business question? So it's more of a using the data effectively to answer all the business questions. So I don't want to repeat myself to what we already mentioned, but this is the main key points that I would have to say. Thank you, Lucy.
Thank you very much. Thank you very much. Back to Robert. What particular decisions that have been impacted by the data you collect, say, any refinements on your portfolio in the course of learning the past 5 years? I know a lot has changed in Kenya via the curriculum. How has data helped you cope up with the changing environment? If you could speak to that. Thank you.
I can certainly try. So I mean, the data kind of, most of the data that has informed like our day-to-day decisioning has much more been around like the behaviors linked to certain interventions. So we've seen very different responses in different areas of Kenya when it comes to how we engage with the school themselves. Both in terms of like outreach and initial data gathering, and then also like the late like the collections process. So like we have very different streams when it comes to, so we have like 2 clear paths when it comes to how we collect from a school. We have we rate them on ability and willingness to pay, and we've seen different markers through the data, because obviously the easiest data to gather is the collections data. The other piece that we are working on improving right now is also what are the main metrics that lead to repayments in schools. But to be honest, Lucy, we're seeing that's quite consistent across all schools in Kenya. We are seeing differences in our portfolio now in Uganda, though, in terms of like the key markers that lead to schools that pay on time and engage and respond and don't dodge calls and those sorts of things.
Thank you, Robert. We have a question in the chat room, and I will ask Skanda to respond. How can data be effectively used to ensure that education financing decisions prioritize equity, inclusion, and particularly for children with disabilities and other vulnerable groups? If you could start off with that, and any of us, Robert, you can chip in after Skanda.
Okay, there were actually 2 questions around that. There's also another one around security needed and perfection support for clients. So I don't know whether security was more related to the data that the company has. So we've actually been running a very extensive project in which we are actually analyzing how susceptible or how good we are with respect to cybersecurity. So we are actually doing a whole exercise. We employed an external agent who are actually doing it end-to-end as to how we can actually improve our data security, and how we can actually how we are at the moment and where we need to go, basically. With respect to the second question, ensure financing decision prioritize equity and inclusion. We We are focusing on actually lending to schools who are more focused towards female students, or they have a sufficient amount of female students in the school. With respect to disability in children, we're not really actually mapping that out because our main focus is actually how to improve the capacity or the situation of the whole school. We do choose schools according to a certain criteria, but disabilities, unfortunately, isn't one of them. I could actually put it down as something as a priority going forward. But yeah, our main focus is that we look at those schools who have a certain amount of female students in the school and in a certain fee class, basically. Rob, maybe you might want to take this.
Yeah, sure. So, Jean, we've had an interesting journey on this one because we set out to lend to schools, so we weren't intentional at all, honestly, in terms of like what schools, what demographic, who owns the schools, any of that stuff. We've ended up with 76% of the schools we lend to are female owned and run. We've also ended up with many of those schools having infrastructure to support kids with disabilities. Like, honestly, in the early days, we even ended up funding some classrooms specifically designed for kids with special needs without even realizing. So we've become more intentional in terms of tracking it and hearing what they're doing. But I tend to, the only way that we could effectively ensure that education decision prioritizes this sort of thing is if we had like a specific pot of capital where the interest rate was lower, for example. We are working on a number of those things around climate resilience and adaptation. And Sikander, I'd love to learn more about what you're doing, but I'll message you separately on that. Just because unless we're offering an incentive, I don't think it would be prudent for the organization to like specify it. But the nice thing is that we've ended up with a situation where it's just been a natural byproduct of lending to low fee private schools in the most disadvantaged areas, which is where we place our team very intentionally to support that sort of school.
Thank you very much. Yeah, it totally affirms that for any special group that would need to be intentional about in our services, certainly data is required so that we can make informed decisions. So that means it's about enhancing our KYC collecting systems. We keep innovating so that we are able to capture those particular parameters that can help us inform a decision. So indeed, data is very critical for us to make such decisions to support schools that have special needed services for the special groups. Yeah. And back to you, Rob. How has business intelligence shaped decision-making in your institution's education finance portfolio? And Sikander, you will comment to that as well.
How is
data,
business intelligence?
Yes, the data that we collect, the portfolio analysis that we've been involved in doing, how has it helped shape or improve the decision-making process for education loans?
Sure. So I think one of the potential uniquenesses of us is that we are education finance specific. So we only lend to schools. So we've ended up with a team at every level that's like entirely specialized in schools. So the data, ultimately has trained up like a vertical specific team that have become like highly specialized in what they do day in, day out. So that data, I suppose, continues to train the people and also obviously continues to train the machine learning and the systems that sit behind them that inform their decision making. So I would say that's the kind of like primary piece. Sikander, what's it been like as a general lender, I suppose?
I would say that, once we have access to data, there's a lot of things that we get from our field staff that, we need to go into this market, we need to lend at this price point, we need to actually increase our loan values. When you have the data, when you analyze it and when you start looking at it, you realize, you've not, reached the ceiling mark. So let's say if we are basically lending to $500 to a school. And our team is saying, no, we need to lend $700. So there is a chance, basically, they might be correct, but how many requests do you actually have for that is another thing. So we need to actually go back to our data. We analyze how many schools have actually been lent $500 before we actually start increasing our ceiling for our loans, basically. One of the things that comes into mind, which actually is supported by data. Other things are related to like what geographies basically are more inclined towards taking a loan, what type of facilities that we're giving would actually improve our lending in certain locations. So we can regionalize our models, we can regionalize our products, we can increase or decrease the amount of loan that we give out. We can basically rationalize the way we do our trainings. We tried actually doing online trainings for our schools around COVID time and in between as well. Unfortunately, that it wasn't effective. So we had to go back and we have to do one-on-one classroom trainings as well with our school. So we keep analyzing it, and we actually have impact studies as well almost every 2 to 3 years, in which we actually do impact study for all our products. We recently finalized ours in the recent past. We're finalizing the results. So we have independent impact studies as well, just to see how good we are. And what we think we are and how good we are actually doing, basically, with respect to each product. So that's something I would actually recommend that one should really transparently, if possible, analyze themselves through a third party and see where you are and what is actually working for you. Like for our capacity building program, we did a complete study now, and we had like 8 different sort of training modules that we were running, some 1 day ones, some 1 hour ones, 1 5-day ones, and what exactly was working in our training modules, we tried to assess those. So, I mean, we try and go back to the interventions, what we did, how they are taking things forward, whether we want to continue it, whether we should shelve something. So that's how, you know, we do things. It has to do with a bit of research later on, basically.
Thank you very much for that insight. And regarding actually what you mentioned, would like to get more into it. The direction that you've taken of doing financial literacy capacity building for the clients, how would you comment before and now that you're doing it? What has been the impact, and what would be your recommendation to financial institutions that are also here operating in the education finance space?
It depends on what market that you're catering for. Our main focus has been female entrepreneurs and how we can actually improve their financial literacy for doing their businesses. We also started working on maternal reproductive health. That was one of the things. Then we went into gender-based trainings in which we could improve the overall, you know, the complexities of the way household is in Pakistan, what should be the role for women, how they can be included in the decision-making process. So you first initially need to do a study as to who is your customer, what impact you want to actually achieve, and what time do you have, and what resources do you have. Fortunately, we've been able to get good grants with respect to our capacity building. And I would actually recommend everyone to actually go out and actually look for funding. Aside from just your lending practices, you should look into capacity building, because that is something that will basically help you retain your customers over the next few years. That will improve the way your lending, your recoveries come in, and the way your customers actually progress through their loans going forward for the next few years. So I think as much as our lending is an importance for us, capacity building is even more. That's how we actually change lives, and we actually are a mission-oriented company. So that's it goes. You complement both together, basically. But you need a certain amount of grants as well to actually improve your bottom line, improve your sustainability to do that. And we've been fortunate. We've got 5-year grants in the past 10 years to actually support our capacity building projects as well, basically.
Just to echo what Sikandar saying, we've had a similar journey, just obviously much smaller. So that's the whole reason that we set up the Jackfruit Foundation, was so we could put those programs into a not-for-profit entity. So have run a lot of school director training, teacher training, etc. A lot through Opportunity as well. It does feel pretty fundamental that we can't come into these schools, given sort of the realities on the ground, and just expect them to be necessarily entirely ready to take a sort of financing product like the one we would look to offer.
Thank you very much. We have a question in the chat room also, where a participant is asking, what are the key pillars or points to consider in education financing? There's no particular order our panelists can handle.
The pillars would be, again, I would say it's a target market that you want to cater to. If you want to go up, if you are more business oriented, you go into schools who are more set up, more robust, who have a better infrastructure. Basically, you might get better repayments through them. But if you want to go and actually create an impact, you just have to consider what market that you want and keep up with that, keep mobilizing that market rather than actually just attaining your numbers. Just consider that you have to go into that market and just be true to what you are after. Basically, that's the simplest I would say to that question.
Yeah,
Thank you.
I mean, we've just to give people some context, like obviously we've ended up lending to schools that range from $30 a term to around like 220, 230, and 100 kids to 1,000 kids, and kind of all over Kenya. But the bulk of those schools are like below $120 a school term. That's definitely become like our target market, because that's where the technology actually brings some value.
Thank you very much. Yeah, Petros, for purposes of putting perspective as well as Opportunity International with our partners, our focus is on affordable, low-cost schools, given that we are trying to address the issue of many children who are not able to access school. Data shows us that 263 million plus up to today still can't afford or access education globally. Those are the global stats. So for us as financial institutions to be impactful and address that issue, certainly we have to target the low-cost schools which are able to support parents from low-income to middle-income groups. Yeah. So for mission, social impact, alignment, that's how we would choose which schools to focus. But the whole value chain is addressed from low, middle to high for financial institutions. You can have solutions for all those different segments aligned to your mission. Yeah. Okay.
Yeah, and so what we've
yes,
noticed, Lucy, just to jump in, is that most of the financial institutions, like, they are unaware of the potential, and they might even think there is not a market for the low income families and schools that we are actually supporting. So where we can use our market research, and especially the reviewing those researches, how that can support them, I think is kind of a good enabler in how you can use the data properly in the EduFinance in general. So I would like to add that to what was mentioned.
Thank you. Thank you very much. Yes, thank you, Bri, for that. Certainly, market research now becomes very, very paramount, yeah, for us to understand the landscape of the education in our different markets. And that's why we come in very strong as Opportunity International. We support our partners in the different markets with market research, and we refresh, yeah. Even when you have a specific need, you can always reach out to Opportunity International through the technical assistance advisors that we work with in our different countries. We always come through to support with specific needs for you to really understand the market you're playing in, and that builds the basis for product development, so that we bring solutions to the community, not just products that may not be speaking to their needs. Yeah. Back to us as well. I'm trying to understand how data has been helpful in credit analysis. Yes, what is the role of data when we are analyzing these files that we get from schools? We can start off with Skanda, and then Robert, you chip in. What's the role of data in regards to credit analysis and decision making?
So, yeah, so data, overall, I mean, the thing is, if you're looking at developing things like machine learning models, AI models, or credit scoring models, data actually over the past few years for different customers actually starts developing into a certain behavior. The behavior could be, so we have like 11 different algorithms that we are using to cater for our 13 regions across Pakistan. Every algorithm, because of the certain geography, has a certain different sort of behavior. So when we run the ML model for that region, basically it's more customized for that region. So when you use the data, when you keep gathering the data, and we've actually added geolocations as well now. So instead of just actually naming a branch or an area, we actually started geolocating and heat mapping basically areas with respect to the credit behavior as well. So our ML model is actually using that as well now. Aside from that, the type of recovery, the type of things that you see for your customer in your past one or two repayments, that comes into being as well. Then there are some data points that you actually use that could help you basically in future disbursements as well as to how much is the demand, what type of loans you want to go for. Like, as I said, rather than going up a ladder, we actually came down. There was a demand actually to lend to schools or academies which were much smaller than that we were catering to. So now we've started delving into those things basically. There was a question from Carolina. I just like to quickly answer that. How does basically, how do you reduce model with respect to data collection? When you set up your application, you have to actually see who would be actually doing the data entry. For us, we have people who are just basically intermediate with respect to the qualification. English is not their primary language. So we try to reduce the amount of data input and basically we only keep to the most important data points. The other thing which we do is basically for our repeat customer, rather than again completing the whole application, if there's a change in the application, especially the customer profile, the data automatically gets fetched from the previous application. So that actually reduces the time significantly for that. Previously, we used to have a credit file, we used to send it across, and then people used to view it. Now we've actually used a validation process in which the credit file is brought in from the bureau. It gets validated automatically, and the staff does not need to make any decision, so it's done automatically. So you have to keep incrementally changing things in your application, your onboarding application, that will reduce time of the staff, and that will reduce the amount of errors with respect to non-compliance, regulatory non-compliance, or your organizational non-compliance as well. So we're trying our best that we reduce the amount of errors by implementing such controls in our application that the staff we don't give them a chance to make those mistakes. So that significantly reduces the data collection time and the quality of the data as well, basically. So better controls, improvement in the technology, reduction in the cost, and data that you already have, you don't need to input that every time you make a new application. These are the ways that you can actually improve it.
Thank you very much. Robert, do you have some addition to that?
No, I don't think, nothing that would add value on that, but there's definitely a couple questions in the chat I'd love to respond to as well.
Yes, please take them on.
If I can, sorry.
Oh, sorry.
If
No,
I
sorry.
wanted to jump into what Sikander was saying, so before we jump into the other argument, in terms of the credit, I think what can be used is profiling the clients. That you can create a very easy profile in terms of demographics and geographic, every information that you can get on the client, and then you can monitor the performance by having a very robust structure and data set. Then you can use that information for any machine learning that you want to do, so you can see if there's any pattern and behavior. We internally in Opportunity International, we have had cases and during our analysis where we were able to show that clients, school clients that were also partnering with EduFinance in terms of EduQuality, so they're being trained through our EduQuality program, we were able to show that they were better clients from a risk perspective. They were repeat borrowers, and also they had the opportunity, like they had low risk clients. So this was a very good example of how you can use data, and especially in profiling, that can show you the benefit of using the data in the credit ambient. Sorry, that, and to Europe, if you want to answer other questions.
Sure, sorry. Yeah, Ernest, the answer to your question is, I mean, in terms of like how to access cheap capital to lend to schools, like we haven't necessarily seen an easy pathway to that. We've tended to, I mean, we're obviously constantly looking for it. We have set up a blended capital structure. We have certain different pots of capital doing different things and things. But I think the biggest thing, to tie it back to the discussion around data and technology and how we're all doing it, is the most effective thing we've found is like controlling our own costs. So, you know, having one central office, using data to use a distributed field team, etc. I think that's been one of the biggest movers from a unit economic standpoint for us. Sikander mentioned it earlier as well, but just in terms of the grant funding and stuff that you can get to bring in and support with after school programming. But when it comes to like actual cheap capital coming into the markets, it all comes, from our experience, it all comes in hard currency. And we all know what that actually looks like when you onshore it and de-risk the currency piece. So it's definitely not been an easy road on that side, certainly not for us.
Thank you, Robert. Robert, before you go off, there's also a question directed to you in the chat. Low cost may largely be synonymous with informal settlements, system structures, and low conformity, say government requirements for registration. How easy is it for such schools to qualify for loans? Do such schools need to provide collateral? Where do we see increased demand? Yeah, if you could speak to that.
Sure. So I think the most important word there, I suppose, is synonymous. I think we've seen many schools that fit into some of the things you're saying, and even more probably that don't. We do work in informal settlements very, very proactively, and very rural areas as well. Some of the like very initial pre-vetting components are like 3 years in operations, 100 kids or more. So we do try and de-risk at the front end for schools that are too young or too small to be sensible to lend to. There's a massive component, obviously, to overstretching a school, but when it comes to government requirements as well, like we only lend to schools that are registered with the Ministry of Education or with like a private education body, or what's called here APBET, which is like Association for Basic Education and Training. So they do have like affiliations, and like we just view ourselves as the lender. So we've obviously got to make sure that the educational tick boxes are there, because we never want to start meddling in that area. When it comes to collateral, it's a great point. So a large portion of our portfolio is secured. We always lend to a school, or almost always, with an unsecured working capital loan first, and then we do look to graduate them into a secured loan. I suppose the strongest way that we've been able to increase accessibility and therefore kind of as a byproduct the impact is to be very flexible on what collateral and where it comes from and what it's like. So we've tried to be as flexible as possible there, like, you know, taking all sorts of different collateral, etc. And then in terms of the demand for loans, like we've seen it at every level. I would say ECD is probably the most challenging area to lend to, certainly standalone ECD, because of the size of the ECDs. Like we ran some programming through the Jackfruit Foundation in partnership with Hilton Foundation to try and like test and push the envelope and, on what we could do in the ECD space, and we really haven't figured it out yet. So I'd love to hear from people if they have. What we've done a lot of is like primary schools with ECD, The big area of expansion for us this year, I think, is in the TVET space. Again, like it's another space that we wanted to be cautious on before we were a little bit more mature as an organization, just because TVET, the courses are shorter and therefore the stability of revenue is shorter than like a primary or a secondary school. So, I mean, the end of the day, we see as we understand it from a market data standpoint, there's between 15 and 30,000 schools in Kenya and similar numbers in Uganda and Tanzania. So the market is definitely enormous for this space, which is fantastic.
Thank you, Robert. And for the issue of funding, it's always a discussion in the room. And at Opportunity International, we also are actively involved in seeking partnerships with impact investors. And you can always reach out through your technical assistance advisor assigned when we have such chances, opportunities. We usually link you up with impact investors that you can have discussions with. So it's a continuous need, and we always have to deal with it. Yeah. So we have that support, and as we wind up, also we have a participant from Kinshasa who was asking how he would be part of Opportunity International. We will reach out to you. We have our technical assistance advisor in charge of DRC who will reach out to you, and you can have discussions on how we can partner. There's a process of onboarding that you will be introduced to, and we are very happy to have you on board. A final one for Sikanda. There was a question where you're being requested to shed more light on transformation from group lending to individual lending. What data informed this decision?
So roundabout in 2008 and 9, basically, we had a massive issue that almost like 80% of our portfolio went into credit default. And one of the reasons actually we found out at that time was that we were giving loans through groups of 25 people. And the issue was we didn't really at times know where the money was going. So you might have a group of 25 people, you have a group manager, and you have a group secretary. When you actually basically delegate your thing or the way you want to run things to people within the community, at times, they take things into their own hands. Like we don't charge late payment charges. They started charging people within their groups late payment charges. They started taking commissions for sourcing the loans from Cash Foundation. The other thing was that we didn't really know where exactly the money was going. Sometimes in a group of 25 people, the money was actually going to 5 people or 10 people at times, sometimes even to one person. But the documentation was being taken for 25 people. So when we saw that there wasn't much transparency over there, we couldn't really see or the one-to-one contact that we wanted to have with the client, and we wanted to see the impact, we could not determine with a group lending methodology. I know it's worked wonders for a lot of countries. Maybe the environment other countries are operating, it's easy for them. Even in Pakistan, if I see our other partners, they shifted from a 25 group people methodology to either a group of 3 people or 5 people, because they also wanted a bit more visibility as to where the money was going and who to actually target and where it should be going. With group lending, the sourcing actually goes to the group manager and the community rather than you and rather than people coming to us. A lot of our biggest selling point right now in Pakistan, there are 2 or 3. One, we are doing individual lending. People don't want to take responsibility of others, because when you are in group lending, it's social collateral. They don't want to go into social collaterals. They want only take their own responsibility. One. The other selling point is speed of service. So we can pretty much give you a loan within a day. A lot of companies actually, they go out and they do detailed documentation. They have centralized like approving mechanisms, and people don't want that. They want it's simple. They don't want to pay for documentation. So we don't charge anything upfront to the customer. Even the documents that we take are taken through our phones now. So they don't need to pay anything upfront. We don't charge any service charges. We don't charge any documentation fee. We basically don't, the customer doesn't need to pay for anything before they get a loan. That's one of the things that, we try to do for the customers. Even for just for health insurance, initially we started charging them upfront, and the charges are very less. I mean, imagine getting a health insurance for a family of 10 people in just $5 a year. That's very cheap. So what we started doing was, rather than charging it upfront, we started charging it per installment now. So they just have to pay something less than 50 US pence, and they get insurance for the whole family, basically, for hospitalization. So for us, it's very important. And I think we've been able to manage it and sustain ourselves in an individual lending model, and basically exactly know where our money has gone to and who our client is, and to have that one-to-one interaction with our clients, basically. So it was a very big transition, but now it's very easy for us.
Thank you very much. Unfortunately, time is not always our friend. I want to take this opportunity to thank our panelists, our participants, for your active participation, the engaging questions. I know a few will keep coming, and we'll be able to send you responses as on email for those that we may not have touched. But I would like to thank our panelists in a special way for sharing their experiences and being very open with the experiences that I believe each one of us has picked one or two. And we believe we'll continue these discussions and continue utilizing the support, the services that Opportunity International brings to our different countries through the technical advisors. Please tap into our technical assistance, utilize the CEO EduPack reports that we share on a quarterly basis with enough data that can help us continuously improve, innovate, and reinvent how we serve. Thank you very much, and over to you, Genzo. Thank you.
Yes, okay. Thank you so much, Lucy. Thank you to the presenters, and thank you again for many of you who have joined us for this call. This really has been a rich discussion. I can't help but feel like, all three presenters have worked intensively with data, and I can't help but feel and wish that we could delve even more deeply on how data can specifically and in a more granular way, how data can be used to address product development, or what are the key pitfalls of data and problematic data, or segmentation or tagging, or what are the adaptations to market that all three of you have seen coming through your data, and so on. But I think that's the value of these discussions and this network and these webinars. Hopefully these will all be touched on if not here, then in days to come. But I think it's fairly clear, how data ends up being crucial, whether it's market research and scanning the landscape that all of you are working in, or careful business intelligence that would allow you to make these decisions. So I appreciated hearing how all three organizations have sought to engage this very sophisticated ways. It's wonderful to hear. So thank you for sharing your journey, your work with us. I want to also thank the audience for your good questions. Thank you for your engagement. And I think with that, I will hand off to Jane or Rachel to close off our discussion. Thank you all for joining us. Jane or Rachel?
Thank you, Genzo. I'll do just the last bit of wrapping up. Yeah, just to echo everybody's thank yous. Thank you to our wonderful panelists for joining us and for an incredibly insightful discussion. I think we could have done with an extra hour and a half of this discussion, as there's lots more to talk about on the field of data. So maybe there'll have to be a part 2 at some point, and we can come back and see how things have progressed in 6 months, a year. But thank you very much, and thank you to our moderators as well for guiding the discussion, and to our participants for joining with us throughout this whole time. Do keep putting questions in the chat or sending to us afterwards on email, especially to your respective EFP advisor, who will be able to connect you to the right people if you want to learn more about various different areas when it comes to data. One last request is please help us out by scanning the link that you can see on your screens now to complete the post-webinar feedback form, which really helps us to see where we can improve and what other topics people are interested in for us to put on further webinars in the future. As you might know, this is part of a series of webinars that we've been doing as Opportunity EduFinance. We aim to conduct global webinars like this every couple of months on a variety of topics. So hope to see you soon at the next ones. Thank you, everyone. I think we can close it there.
Thanks all.
Thank you.
Have a good rest of your day. Bye-bye.
Thank you, everyone. Thank you. Bye-bye.